a Darius Dale, que creo que lo tenemos ya listo, para que podamos conversar con él al respecto. Darius, I'm very happy to have you here in the Tribune. You know the passion, the enthusiasm that we reflect to everybody. But I think I'm speechless, to be honest with you, to see the market again today going up. It was a little thing that I was realizing earlier today, that the market's supposed to come back today. No, the market seems to be strong. Market breadth is strong. And obviously, listening to your research, I know you've been calling to actually buy the dip. But I want you to tell us about the risk, because obviously this reconciliation bill is something huge for the bond industry, and I think it's pretty important for the audience to understand what you have to say. Thank you for coming, Darius.
Victor, thank you so much for having me. I love being on your program, brother. So talking about the left tail risk in the market, I would say there are three primary risks that investors need to be aware of when they're looking out, let's say, 3 to 6 months. One, we still have the growth slowdown that's ahead of us with respect to the response to tariffs and restricting immigration and the general level of policy uncertainty that's putting a dampener on business investment. So that's number one. Number two, we have brinksmanship with respect to the one big ugly bill. The bill's probably going to get bigger and uglier in the Senate, which will cause the members of the House who want smaller government to get angry, and there might be some battling this summer in terms of the timing of that, because we have the debt ceiling coming down the pike, and there may be some brinksmanship associated with that as well. And then ultimately, you really have to think as an investor, where are we headed? So just where are we headed? In our view, it's been paradigm C, which is the Trump administration is going to try to grow their way out of the U.S.'s debt and the negative debt and deficit dynamic. So this is why we think risk number 3, which is tariffs, is not nearly as big as a risk as the market thinks it is.
And let me ask you something. What do you think about what's going on with the gold at this point? We got today in Malaga, which is a city in Spain. We were speaking in a conference sponsored by Negocios TV about the gold. But obviously, I'm seeing people calling the gold going probably to 4,000 and probably debating with your research, saying that the Bitcoin, it might not really look that bullish at this point. And I know you've been telling people to basically position in gold, buy the dip, and obviously see the Bitcoin as an alternative. But I have this contradictory information about that. I want to hear you about the gold, the Bitcoin, and obviously buying the dip. I think everybody is going into that, unless there is any surprise that we create an ugly summer. What do you think about those asset class, Darius?
4,000 is way too low. Gold's going to 10,000, Victor. Bitcoin's going to $1 million. We are in a fourth turning in which there is a demand for populism amongst the U.S. electorate that is contributing to an aggressive rate of supply from the U.S. Treasury. Well, at the same time, we have our 3 primary foreign creditors pulling back. Europe is pulling back because they're remilitarizing. They're increasing their defense spending. Japan is pulling back because the Bank of Japan is normalizing monetary policy and creating a negative fund of flow story from the U.S. back to the JGB market, because they need more private demand to capitalize it, because the Bank of Japan is getting out of the way. And then you have the strategic decoupling with China. And their treasury demand will decline over time as they ship us less exports. So you have the 3 largest sources of foreign capital for the treasury market going down, while treasury supply keeps going up. Eventually, the Fed is going to be forced to step in and fill the void. That's gold 10,000, Bitcoin $1 million. I think that's a very high probability by, let's say, this time in the next couple of election cycles.
Give me 1 second, okay? I'm going to explain this to español. Yo quiero que por favor se unan, le expliquen a toda la audiencia lo que está diciendo él. Y también quiero que sepan algo que es muy importante para ustedes como audiencia. Él, que es el CEO de una compañía que se llama 42 Macros, 42 Macro, él es el que asesora a grandes manejadores de dinero acerca justamente del posicionamiento del portafolio desde un punto de vista top-down, donde nosotros estamos viendo cuáles son los países. Fíjense lo que nos está diciendo. Él cree que en una cantidad de ciclos electorales, no lo dice que sea para el 2026, ni siquiera para el 2027, pero está diciendo que cualquier retroceso, es increíble lo que nos dice Darius, y eso lo vamos a estar repitiendo en diferentes oportunidades dentro de nuestra programación próximamente. Darius habla de que si sigue lo que está pasando con esta cantidad de endeudamiento, pues efectivamente la gente no va a estar comprando bonos de la deuda de los Estados Unidos. En ese momento entraría la Reserva a comprar sus propios bonos, lo que haría que inmediatamente los mercados a ver esto hicieran que no solamente el oro, sino que el Bitcoin pudiera ir hacia arriba. Así que él pronostica, a diferencia de muchos otros como yo, que estamos escépticos de que el Bitcoin pudiese llegar en unos ciclos electorales, pongamos unos 4 o 5 años, al $1.000.000. Darius, obviously this is a major, big news for us. When you are forecasting the Bitcoin at $1 million, are you forecasting this for the next 5 years, the next 3, the next 10? Because obviously the goal at 10,000, I'm seeing that more realistic than the Bitcoin at $1 million. But what made you feel like it would be clearly a path towards that?
Yeah, well, I think it's all for all the same reasons that we just described. Sovereigns don't default on their debt, particularly when they print their own currency. So if you think about the set of choices that the administration, and not just this administration, but subsequent administrations and Congresses will have in terms of getting themselves out of this fiscal mess, there's only three choices. You can grow your way out of the debt, you can cut your way out of the debt in terms of fiscal austerity, or you can print. Well, we just saw them try to cut their way out of the debt with fiscal austerity, and it's a joke. It's going to fall well shy of the kind of cuts that are required to stabilize the debt to GDP ratio. And on top of that, they're legislating tax cuts, which will reduce revenues relative to baseline. So the next step is, well, let's take those tax cuts and try to grow our way out of the debt and try to juice the economy and stabilize the debt to GDP ratio that way. That's the step that we believe that they've pivoted to, which is paradigm C, which is why we're so bullish on stocks, gold, Bitcoin with respect to the long term. But when we talk about $10,000 gold or $1 million Bitcoin, those are round number targets. There's no real math behind that. That's just based on our fundamental belief that this growing geopolitical supply-demand imbalance in the Treasury bond market, of which I can show you 200 to 300 slides that support that argument, there is math behind that supply-demand imbalance, and we ultimately understand that the Federal Reserve will be forced some way or another, and probably multiple ways, to capitalize the Treasury market in greater and greater quantities over the next 5 to 10 years. So who knows? I'm not going to be specific about this, but I do believe that if we're having this conversation on June 3rd, 2035, I think we'll be well past $10,000 gold and $1 million Bitcoin.
Bueno, fíjense bien, disculpe, give me one second, Darius. Lo que nos está diciendo, creo que es interesante que todos le prestemos atención. Realmente lo que nos está diciendo es que el país sigue siendo inflacionaria, que efectivamente hay una cantidad de materiales que soportan estadísticamente que vamos hacia allá, que el dólar, para poder salir de la deuda que tenemos, va a devaluar la deuda, básicamente inflarla, que es otro mecanismo que hay en economía para tratar de dilapidar el valor del dinero, y que efectivamente al dilapidar el valor del dinero, esos activos como los activos digitales y como el oro forman parte de lo que habría que tener para poder protegerse. Bien interesante lo que nos dice allí. Creo que la siguiente pregunta que le voy a hacer es qué ve más en el corto plazo en este 2025, dónde nos deberíamos posicionar en el caso de que haya una caída, cuáles serían los mejores activos, que creo que es lo interesante para ustedes como audiencia. Darius, I think that we are scared to death. I was explaining then what happened with your prediction about the next few years based on the fact that we need to get out of debt, we need to inflate, we need to dilute the value or debase. But the other question towards more a short term, 2025, you and a lot of other analysts are saying that any dip, it might be a viable dip at the moment, because if we inflate at the end of the day, we're going to keep going up in terms of dollars. But your question is, what are your more important parts in the stock market, the sectors that you would see that we need to buy in any dip, if the dip is coming out of anything within the next few weeks, perhaps in the summer? Where do you think my audience and our audience should buy at this point based on your research?
Yeah, I think most retail investors would make their jobs a lot easier if they didn't do this kind of investing. Just buy the index. That'll save you a lot of time and stress and a lot of negative negative tracking error if you just bought the index. But if you force yourself, if you're so itchy to buy specific sectors, then I would start with the tech sector and the communication services sector. We are still middle innings with respect to the secular AI boom that is, a lot of people realize or believe that is going to change the world. And if they're true on that, then there's a lot more upside to participate in with respect to capitalizing those businesses and all the businesses that their services are going to support.
Darius, final question. And in your material, in all those hypotheses that you guys have, and I'll build it in 42 macro, do you have any hypothesis on any real conflict on a military way between China and the US in these cycles in the next 5-10 years? Do you think that might happen out of Taiwan, or there is a direct confrontation, or that the Russia-Ukraine factor will escalate towards Europe? Because obviously that's a part of a hypothesis that might derail some of the growth in the stocks if we have that caught on the demand. What do you think about that possibility?
Yeah, I would say it's more than a possibility. I think it's a probability at this point. We are on a fourth turning. Historically speaking, in fourth turnings, the income and wealth inequality that is contributing to the political volatility that we see not just in this country, but in other countries, is likely to continue to boil and eventually come to a head. And unfortunately, generally speaking, politicians tend to take the easy way out when we have these types of, internal dynamics. The easy way out is pointing abroad and finding an enemy and reorienting the entire economy's energy and frustration from within to external. And unfortunately, the US and China are very much on a, what feels like an inevitable path towards conflict. I'm hoping that we can avoid it, but unless we solve the income and wealth disparity issues in America that are contributing to that, political discontent, and we're nowhere near solving that anytime soon, then I think we're going to remain on a path towards conflict. So I'm hoping we avoid it, but again, it seems unlikely at this point.
Listen, we have 30 seconds, and I think it's important for you to tell me in your models, what do you think about real estate? If we see the rates keep going up 5% on the 10 years, let's say, 5.5 on the 30, and you are mentioning that we're going to have inflation, real estate are a real asset, they're going to keep value, but at the end of the day, it's a paralyzed, a frozen market. What do you think might happen there when there is not affordability, and obviously those interest rates don't allow the buyers to step in, even though it's a real asset that can keep value? What your models are telling you on that when you see a lot of other guys saying real estate might come down very soon because of the deflationary factor affecting the real estate sector?
Yeah, you're right. There is some deflation affecting the real estate sector right now from a demand perspective, particularly on the low end because of the immigration reform. However, when you take a longer-term view at it, it's very likely based on the sequence of policy implementation that we see credit easing before we see a significant enough slowdown in the economy that allows interest rates to come down in a way that materially affects mortgage rates that would free up a lot of the trapped, frozen supply in the existing home sales market. So there's a potential chance where you have an inflation of demand vis-a-vis credit easing. At the same time, we don't have an increase in supply because mortgage rates are too high and the existing market is frozen shut still. That is a big worry of mine, on top of the fact that we're on the process to legislate Section 232 tariffs on steel, aluminum, lumber, copper. These are all things that houses are made of. So what's likely to happen is you're going to start to curtail supply in the new home sales market as well. And so ultimately, when you take a multi-year view forward from today, based on everything we think we know about the future for U.S. fiscal and regulatory policy, it's highly likely that the rate of price appreciation in a very low transaction real estate market starts to reaccelerate again. And that could be quite a problem because you're going to start to freeze more people out of the housing market. And that's a political issue as well.
Darius, one second. Bueno, ya tenemos aquí a Darius, observamos, nos vamos a despedir de él, pero sus predicciones son, el Bitcoin se dispara, el oro se dispara. Oigan bien, el sector inmobiliario se dispara porque pierde valor el dólar. Algo que vamos a analizar desde la tribuna. Darius, we're super happy. Thank you very much. We're going to revisit this with you probably in the summer. Thank you for coming to our Tribune. Have a great day.
Have a great day. Thank you so much, Victor. I love being here with you, brother. God bless.
God bless.